What's up, people? Welcome or welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So next week will be a busy one. Virgin Galactic will have its earning call tomorrow on Monday, November 8th after market close, and Neo will be on Tuesday, November 9th after market close. Make sure you're subscribed to the channel so that you're notified when I do post those videos sometime in the Wednesday to Thursday timeframe. So for today's video, I'd like to rewind the clock a bit and check in on some of the recommendations I made earlier in the year. The first week of the year, I posted my top 10 list of stocks that somebody could realistically pick from and get their own starter portfolio going. And at the time, I said this. And if you remember, in the last video, I posted about active and passive investing, and I'll link it up here for you guys. You can check it out. 25% is really when fun things start happening when you look at your year-over-year compound annual growth rate on your investment. There's no doubt in my mind that a portfolio that incorporates a combination of these top 10, along with Tesla, Neo, Virgin Galactic, and ChargePoint, by the end of this year, will experience massive gains that is sure to feel something like this. Don't say I didn't warn you. That was a pretty bold thing to say at the time, especially for someone who's not a financial advisor and had just started a YouTube channel, right? And if you've watched the video in full, you know that the 25% number is really what I was targeting at a minimum for the year. My goal then, and it still applies now, is to highlight opportunity as I identify them, provide you with some perspective, and ultimately help you help yourself achieve your financial objectives. Investing is more than just picking the next hot stock or crypto and flipping that for a quick profit, right? The goal is to get you thinking more holistically about the market and what moves it, using that macro view to identify trends and societal shifts that you can capitalize on for long-term sustainable wealth creation. One of the common responses that I get from people who are not currently investing or are thinking about it is, I don't have enough to invest. All right, I get it, right? Investing can be overwhelming at first, and so there is this misconception that you need a lot to get started. So in today's video, I'll quickly go through each recommendation I've made and their current year-to-date gain or loss. I'll then reveal for the first time a smaller account that I started on January 8th this year to address that very misconception. The account was funded with $650, no trading whatsoever, a true buy and hold strategy for the past 9 months. And I'll then wrap up with my weekly performance review expressed in percentage gain or loss for the portfolio. I'd recommend watching all the way through so you don't miss on any pertinent information that I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are 2 easy ways to show support to the channel and help it grow if you appreciate the content. All right, let's get into it. If you're wondering why these were recommended, I'll link the original video here. It has all those details, but for now, let's quickly run through each one of them. The first one is Apple, with a 14.01% gain year to date. Like many on the list, it's been a roller coaster to squeeze those returns. The second one is Taiwan Semiconductor with a modest 8.03% gain year to date. The chip shortage situation has been challenging all year and up until now was more of a headwind, but their ability to increase capacity throughout the year has kept the stock moving in the right direction, albeit slowly. Number 3 is United Microelectronics, or UMC. Also in the chip making business, they posted a market-beating 28% gain for the year so far. Next, we have Square, which saw a respectable 9.07% gain for the year. This was one of the few ways to play the Bitcoin rise without buying Bitcoin specifically. Next up, we have Riot Blockchain, which is a Bitcoin mining company. Year to date, you're looking at an 85.34% gain. This one would have done wonders for your portfolio. Along the same lines is Mara, which is also a Bitcoin mining company, and they returned an eye-popping 511% year to date. Now, those were the individual stock picks. Then for those who are more risk averse and may have wanted to balance their portfolio with something that's a bit more stable, I had recommended the ARK ETF family. First up is ARKK, ARKK, which is down by 1.77% year to date, though I suspect that they'll finish the year in the green. Next up is ARKG, focused on the genomics sector. That is down by 16.42%. Not so hot. But again, if you think about the ARK ETFs, they're on a 5-year trajectory, so that 16% in the coming years will likely turn around. ARKQ is next, and that's going to be focused on robotics and autonomous driving. That is up by 16.36% year to date. And finally, we have RW, which is focused on e-commerce and the Internet of Things type businesses. That has returned a 7.75% gain year to date. Now, for reference, the biggest gainer out of the three major indices is the SP 500. And as always, it is a great benchmark for trying to determine if you're beating or lagging the market. Year to date, the SP 500 has returned 25.07%, which is beyond what anyone would have typically expected. Now, I'd love to know in the comments below if any of you hold any of these based on my recommendations or not. Now, let's get into the baby portfolio. As I said in the intro, one of the drivers for creating this portfolio and sticking to a pure buy and hold strategy is so that I could come back later in the year and 1, provide you with a tangible example to support the claim I made. 2, it was to show that you could start with a smaller amount and still have it be beneficial. It's part of the reason why I present my weekly progress in percentage form only. And 3, it was to show my kids tangible examples of what investing could actually do for them over time. It's hard enough for us adults to invest versus spending all the time. Now try telling a kid, don't buy that random toy, save the money and invest so that you can, in the future, get what you really want. Yeah, good luck with that one. But I was able to make believers out of them, which is pretty cool. All right, so let's see how I built a portfolio and what's actually in it. 2020 was all about the market realizing that EVs were here to stay. So it made perfect sense that I would have my 2 highest conviction EV plays included as they scale in 2021. So for that reason, I have NIO with 6.71 shares and Tesla with 0.02 shares. I came into 2021 with a strong conviction that crypto was primed to take off and it would achieve mainstream recognition as an asset class. And so Riot was added with 5 shares, Mara with 2 shares, and Doge as the pure direct crypto investment with 1,000 tokens. And again, total investment was $650 invested between January and February of this year. So how does it all shake out year to date? Let's get into that. NIO is down 19.67% or $69.50. Why? Because I bought near the top. And as you can tell by the average cost, I have not gone back to average down. Tesla is up 58.72% or $90.96. The point here is you don't need to own a full share of Tesla for it to positively impact your returns. Riot is up 50.48% or $53 even. Mara is up 494.77% or $105.71. Last but certainly not least is Doge. And Doge is up with a crushing 2,549.18%, turning a $10 investment into $264.48. And so at the top, the portfolio had just over doubled and was worth a little over $1,300. Current value sits at $1,084.66 for a year-to-date gain of 66.87%. That's over twice the returns of the SP 500. The bottom line is this. It doesn't take much to get started. Outperforming the market isn't that hard if you're willing to put in a bit of time and research once you get a hot tip from a channel like mine or many others out there. The longer you stay invested, the more likely you are to build your own confidence. That confidence and shift in mindset is what allows you to see through the noise of the market, identify the next stock with a 400+% potential ROI or return on investment. And that's going to be like something like Hive, right? For example, that's why I'm invested in them. And that confidence ultimately is what lets you allocate enough money so that when you achieve those returns, you are one step closer to life-changing money and wealth. This is a good segue into my main portfolio weekly performance review expressed in percentage gain or loss. All 3 major indices are at record highs, and this is because earnings season has been, for the most part, exceptionally good. That said, the main driver for the market continuously pushing higher is the fact that Fed Chairman Jay Powell finally laid out the tapering plan this past Wednesday, and it is now set to start by the end of this month. Now, it's important to note that there is some flexibility in the pace of the reduction of asset purchases, but the process is expected to complete in July 2022. The first rate hike will occur shortly thereafter, followed by a second rate hike in 2023. That is precisely what the market was hoping for, and it moved higher in anticipation of the news and rally even further once we got confirmation. I was already up by 5.66% at that point on Wednesday. This was the last thing that could have derailed market in the near term, and it has now been cleared up. So there is no more uncertainty, and so it is very likely that you'll see record highs after record highs leading into year end. I personally closed the week with an 8.82% gain. The account has officially exceeded the year-end target with 2 months left to go. Perfect setup for launching to the moon, but we'll have to wait and see how it all plays out. Maybe to elaborate a bit more on why I don't expect any major pullbacks, fund managers and investors at large mostly are not going to want to realize any additional gains this year and have to pay taxes on that come 2022, right? So by waiting until after the new year to realize any capital gains at this point, you can defer those gains all the way to 2023. Something to consider as you yourself think about your strategy for when to realize some gains. And on that note, I'll leave it here for today. Hope this gave you a new perspective and showed that no amount is too small to invest. If it did, make sure you drop the video a like and share with others who you think could benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and I target at least one in-week video for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.